Hello, in this lecture we're going to continue on with the master budget by completing the cash budget. So let's take a look at everything we've done so far. Just a quick recap. We do need to do these things in some type of order in order to complete them properly. We have to start off with the sales budget so that we can then do the production budget, the raw materials budget, the direct labor budget, the factory overhead budget, the selling budget, and then we have the general and administrative. Then we looked into some cash items, including the cash total budgeted sales and how much we're going to receive on the sales side, and then total cash receipts calculated. We can use this information now to complete the cash budget. So we will start off with the beginning cash balance. Now, the beginning cash balance will come from the balance sheet. That's going to be where we ended last time. So if we look at the information given to us in the problem, we have cash as of 6/30 of 40,000. That's where we start. That's our beginning balance here. It's the ending balance of last period. That's where we're going to start. Then we're going to have cash receipts from customers. We will get that from what we have calculated right above, total cash receipts from customers up top, and that will equal this 490. That will give us the cash that is available to use and spend for the month of July. So we will, of course, add these two up. I'm going to say this equals this 40 plus this 490,568 and enter. I'm going to go ahead and underline this one a bit differently. I'm going to go to the Home tab and use the underline in this format. Then we're going to talk about, of course, disbursements, cash disbursements. So we have cash disbursements. We're going to have payments for raw materials. We're basically going to go through our budgets now and plug these numbers in terms of what our cash disbursements were. Now, if we go up to the raw materials budget up here, we can see, okay, we have the raw materials budget July, August, September. But the raw materials is a bit confusing because what actually happens is we buy the goods on account into accounts payable, and then we pay for them in the following month. So when we talk about cash then, we're like a month off all the time. So the cash that actually went out when we talk about the cash for July is actually the purchases for June, and therefore the accounts payable account right here on the balance sheet for June is basically the cash that is going out for in July because of that month lag of from when we purchased the stuff to when we paid for the stuff. So it's actually going to be this 200,500. So we're going to put that down here. I'm just going to type that in. Right, so that's going to be a bit confusing. The rest of them are a bit more straightforward. We're going to talk about the payments for direct labor now. So payments for direct labor, we're just going to scroll up. I'm going to say equals, and I'm going to scroll up to our budget for the direct labor. Somewhere up here, we did direct labor here in item 4. So I'm going to pick up the direct labor, this 137.99 in cell C38 for me, and that will come directly from our budget. Pretty straightforward on that one. We're then going to talk about variable overhead. So variable overhead, I'm going to say this equals, and we're going to go up to where we budgeted the overhead. So if we scroll up to the area, we have factory overhead here. We have the variable portion and the fixed portion. We're looking for the variable portion at this time. That's the 25,461 in July, cell C44 for me. I'm going to select enter, and there we have that. Next, we're going to go to the sales commission. So we have sales commission. I'm going to say that equals. I'm going to scroll up to the selling and admin area. Here's the selling and admin area. We have sales commission of, in this case, the 44,496 in cell C52 for me. I'm going to select enter. Next one we're going to have is sales salary. Sales salary, we're going to say in cell C484, I'm going to select equals and scroll up to the selling and admin once again. So we're going to scroll up here to the selling expense, or just the selling, I should say. We have the salaries of the 35 in cell C53 and enter. So there is that information. Next, we're going to have the general and administrative expense. So here we have general and administrative. I'm going to select for July. We're going to say this equals. We're going to scroll up to the area where we budgeted the general and administrative up here. We're looking for just the salaries in this case. So I'm going to select just the salaries, and we're going to select enter. And that's the 11. And then we're looking for, there's some other miscellaneous items up here. So when we scroll up here and we try to pick up some other type of cash information in some other data that is given on the left hand side, for example, we have the dividends here of 10,000. It says those are in August. So I'm just going to list those even though we're working on July. I'm just going to put that other information in here at this time. So we're going to go down here and put in dividends. So we have dividend. I'm going to select tab. There's nothing in July, but there is some in August, and that was that 10,000 we picked up. There's not going to be anything for September, so we might as well put that in now. So then there's going to be some other miscellaneous information. One's going to be loan interest. So we had two loans. We had a short-term loan and a long-term loan. They're both going to be 1% interest rate, which is pretty nice for the long-term loan especially, but we're going to have 1% interest rate on each of those. So if we scroll up here, and I'm going to look on our balance sheet for the loan, we had a short-term of $12,000. That's the short-term loan. So we're going to do the calculation of the interest here for July. We're going to say this equals 12,000 times 0.01. That's going to be interest for this time period, the month here. So we're going to select enter, and then we're going to have the long-term interest. And so we'll have the same kind of thing here. We're going to scroll up, and long-term, it's a monthly interest rate. So notice they didn't give us the yearly rate. We're not backing into the yearly rate. It's a monthly rate. So that's why it's the 1% here. So we're going to scroll up, and we're going to find the long-term note. So if we scroll up here, we're going to say, okay, the long-term note is right here, 500,000. So we're going to scroll back down. We're going to do that calculation. I'm going to say this equals 500,000 times 1% or times 0.01. And that will be the 120. So the 12,000 times the 0.01 will give us that 120%, where they're going to calculate the loan interest on not the short term, but the long-term loan. So we also have a long-term loan out there. We're going to check the same thing. We're going to scroll up, and we're going to take a look at the long-term rate, which happens to be 1% as well. 1% per month, not per year. So that means we could just make this easy calculation once we find the loan amount, that loan amount being 500,000. So we're going to do that same calculation down here. We're going to say this equals the 500,000 times 0.01. 1%. If we move the decimal place 2 places to the left, 0.01. And if we select enter, that will give us the 5,000. So we have the 5,000 for the loan interest on the long-term loan. Next, we have kind of a miscellaneous item, the purchase of equipment. If we scroll back up here and we just look at some of the other things that will affect cash, that are types of miscellaneous information, one of them will be that there is a purchase of equipment here, happens in September of $133,675. $133,675. So I'm going to go ahead and put that in there now. It's going to be in September. Let me, 133,675. And we're not going to have anything for July. We're not going to have anything for August, but we might as well put that information in now since it's available to us. And that'll give us the total cash disbursement. So the total cash disbursements, we're just going to add these up, the 200 down to the 0. We are going to use the sum function in order to do so. So we'll select equals SUM brackets, and then we're going to highlight from the 200, adding this all the way down to that 0. Although this is a 0, I would add that in their formula, so that when we copy it across, if we copy it across, we can then make sure to pick up that 133,675 when we get to that area. All right, so I'm going to go to the Home tab. I'm going to go to the Font Group. I'm going to underline this little 0 so we can see it's a calculation kind of a bit that way. And then we're going to have the preliminary cash balance. Now, why is it preliminary? Because we're going to deal with the loan or have a minimum balance afterwards. So I'm going to say the preliminary is going to be the cash available to us. That's what we had available minus the disbursements we made through the month of July. That means we have a cash balance of 103. Now we had a provision over here that we wanted to have a minimum balance of 40,000. And the only reason we have this short-term loan, we kind of told the bank, hey, if our balance goes below 40, then we want a short-term loan automatically to keep our balance at 40. That's kind of our level of cushion that we want security to have. Since we are over that amount at this point, we are going to adjust for short-term loan. And that adjustment is going to be what we need to have happen to pay off that loan, which is of course the 12,000 is going to pay off the loan, and that'll give us the ending balance. So we're going to say equals this 103, that's our balance before we pay off the loan, minus the 12,000, that is what we're going to expend to pay off the loan, reducing our balance down to 91,391. I'm going to go ahead and underline here, Home tab, Font Group, underline. Okay, so now we're going to start off, do a similar calculation for August. So the beginning balance for August will equal the ending balance for July. So the beginning balance will be the 91,391. And we're going to do this a little bit more quickly and run through this, be much of the same type of calculation for July. So we're going to start off with the cash receipts from customers, which equals this item right here, the cash receipts, and enter. Going to go ahead and underline that by going to the Home tab, Font Group, and Underline. We're going to add up the beginning balance for August plus the cash receipts. I'm going to do that by copying across this formula. So if we double click, we can see these two add up. Enter, put our cursor back on it, autofill right there, and drag that across. Double check that it did what we wanted. It does. We added those two up. That gives us the 578, 591. Then we're going to go through here and add up all these items straight down. So we're going to say raw materials equals, scrolling up to the raw materials area where we calculated that budget. We're going to scroll up here with the sales, product, production cost, raw materials. Now remember that raw materials, we're going to pay off the prior month. So we're going to pay off July in August. So it's kind of tricky in raw materials. It's going to go in and out of accounts payable. That's why we're doing it. But we're going to pay off that 207,224 in August that we purchased in July. Direct labor is going to be straightforward. We're going to say that equals. We're going to go up to this direct labor budget. Direct labor right here is going to be that 140. Then we're going to go to the payment for variable overhead equals. We're going to scroll up to where we have the overhead budget. Overhead budget being here. Now we're only picking up the variable portion because the fixed portion is not cash related. It's going to be depreciation, which is not a cash item and therefore is not on our cash flow statement. Sales commission, we're going to say that equals and go up to our sales area. So the sales area up top, we're picking up the commission. We're going to break out the commission separate from the salaries. So that equals. And then we're going to pick up the sales salary, which will be a fixed amount, unlike the commission. We're going to scroll up and pick that up. And that's going to be the 3,005. Enter. And then we got the general and administrative. That's going to be the same because it's going to be the salaries, which are going to be the same from month to month. So that's the 11. Then we have the dividends. Now, there's not going to be, actually the dividends were in August. So if we scroll up to this other information, dividends in August. So I'm going to scroll back down and say, okay, yeah, the dividends, I think I deleted those. Those were in August. And there's not going to be any in September. The short-term loan, there is none because we paid off the $12,000 last time. No short-term loan, that's gone. The long-term loan, however, is going to be the same from month to month. We still have the $500. The rate of interest is the same. Therefore, I'm just going to say that equals the same $5,000 that was there. We have a $500,000 times 1%, $5,000 on the month. No equipment purchase. I'm going to go to the Home tab, Font Group, underline under that 0, and we're going to sum this up. We're going to sum up the disbursement. So I'm going to double click this. That's what we want, the same formula in the next month of August. So I'm going to put my cursor on the cell, autofill, and drag it over. So auto drives it over, Dr. Phil does the calculation. Then we'll double click on it, see if it did what we want. It did. So that was done. We added up the disbursements. We're going to do the same thing here. This cell is saying we want the cash available minus the disbursements. Enter. Going to put our cursor on it, going to put our cursor on the fill handle, have auto drive that over, and Dr. Phil calculate, double click on it. Did it do what we want? It did. Now, we don't need to make any adjustment. We don't need to pay off the loan. It's already paid off. We have a solid cash position. Therefore, we are just going to have no adjustment. So we don't need to take out another loan in case we have a cash problem. So that equals the 133 minus 0. And our ending cash balance then is still that 133, 131. I'm going to go ahead and underline Home tab, Font Group, that 0 once again. Then, beginning balance for September is going to equal the ending balance for July in the cash budget. We're going to do this one more time. We're going to say, all right, the cash receipts is going to equal the amount we budgeted up top. We're going to sum this up. I'm going to do that by auto-filling this number. So we're going to put our cursor there. Auto drives it over. Dr. Phil calculates. Going to go ahead and double click, did what we want. That's good. We added those two up, put our cursor on this number. We're going to go to the Home tab, Font Group, underline, and then we'll just do the same thing again. We're going to say, okay, raw materials equals, scroll up to the raw materials budget, raw materials up top here. Now, once again, we're going to pick up the prior month of August because it's going through accounts payable and we don't pay it until September. So we're paying off August in September. And then we're going to go to the direct labor, which we do pay in the same month, and go up to the budget for direct labor. The budget for direct labor here, 143.5, and enter. And then we're going to go up to the variable overhead, so equals, scrolling up to the variable overhead. or the total overhead, but we're picking up the variable portion in that budget, not the fixed portion, because that 21,000, that's depreciation and it doesn't have any cash relation. So we're going to, that kind of rhyme, that was good. Okay, so then we're going to go into the sales commission equals, scrolling up, sales commission, and we're picking up the sales commission point, the variable type part. Then we're going to pick up the fixed type part of the sales, which would be the salary. So we're going to select equal, go up to the salary, 3,005, enter. And then we're going to pick up the general and administrative salary. That's going to be a fixed portion, that 11,000 there. And then we already have the dividends. Short term, there's going to be no short-term loan payment on the interest because we paid off that loan and we don't have any loan anymore. But the long-term loan, we still have that. So we have the 500,000 times 1% is going to be that same 5,000 that we're going to owe. And we know that we already picked up the fact that we paid cash for equipment in the amount of $133,675. I'm going to go ahead and underline that. Home tab, font group, underline. And then we want to sum up the disbursements again. I'm going to do that by autofilling. We want the same relative formula from here to there. Put our cursor on the fill handle, and then auto drives it over. Fill does the calculation, double click, and it summed up the cash disbursements as we would hope that it would. Then we're going to do the same thing here. We have the cash available minus the preliminary cash balance. We want that same relative formula, so we're going to put our cursor on the fill handle. Auto drives it, fill calculates it, Dr. Fill that is, and we're going to double click on that. It did what we want, cash minus the disbursements. And note that we're under the 40,000, and there was the provision up here that we wanted 40,000 as our level of cushion. So the bank is going to automatically say, okay, what do we got to do to get the balance up to 40,000? So I'm going to do this kind of backwards. I'm going to put the 40,000 down here and then say, okay, what do we need for this cell plus this cell to equal the 40? Well, that's a subtraction problem. It's going to be, this has got to be 40 minus the 28. 40 minus the 20, that means 11,835. So the 28,165 plus the 11,835 equals 40,000. So we kind of backed into the plug, the loan we need to take out in order to get to that 40,000. All right. So now let's do the total column. And total column is going to be pretty straightforward. There's one kind of trick to it. That we're going to do the total for the entire quarter here. So the starting number, you would think it's kind of thinking it would be reasonable to think we're just going to sum these up, but we're not going to sum them up for the starting number. We're starting at the same point as if it was the first month. We're starting at the same point of July 1st at 40,000 when we talk about the 3-month period, the quarter. So that's the only kind of tricky piece. The rest of it's how you would think when we're trying to sum up the quarter. And that would be the sum of the receipts we got for 3 months, July, August, September. And then we can go ahead and autofill this. We're summing those up this way. Let's put our cursor on the fill handle, drag it over, and underline this like so. Did it do what we want? It added those up. It did. Next, we're just going to sum up all the disbursements. So this equals the sum of the disbursements. It's going to be this plus this plus this, July, August, and September. And then we can autofill that down. We want the same relative formula for all the disbursements. So I'm going to put our cursor on the fill handle, drag that down, all the way down, autofilling down, down. So auto drives it down, Dr. Fill calculates, and let's double check a couple of them. We're just going to say, yep, that summed up the column, or the row, that summed up the row. And so that looks correct. I'm going to go ahead and underline here. So I'm going to say home tab, font group, and underline. Then I'm going to pull this over in the same fashion. So we have this column here. We're going to autofill that, drag it over. And did it do what we want? It took the total disbursements. It did. Note that we should be able to add those up this way too. If I added them up this way, it's the same number. So that looks good. And then we got the preliminary cash balance here. So once again, if we do this, we want that same relative formula. So I'm going to pull that over. I'm going to pull that over and see if it did what we want. It took the total available minus the disbursements. That's what we wanted. And then we've got this adjustment. Now you got to be kind of careful on this adjustment, because if you look at these two formulas, we said here we took this number minus this number to get to the 91 to pay off the loan. And over here we took this number plus this number in order to bring us to that minimum balance. So the adjustment we want here is really this minus this minus this, because this number at the end of the day should equal that 40,000. So what we really need here is the 12 that we paid off minus the 11,835, and we know that 165's got to be reducing this balance because we need to get to that minimum balance. We need to end up at the same point that we did at the end of September. It's going to be a subtraction problem, therefore. So it's going to be this 40,165 minus the 165, bringing us to that minimum balance of 40. These two match up, and this could give us kind of a summary of the quarter as we go on the cash budget.